So in other words, please allow us to do a different question here today, which is September 2021. September 2021. Question number 5A. Question number 5A. So the question that we are doing here is September. Question number 5A. Great. Remember, it's not about perfectionism. It's about you just getting to try. Just get to try. Hey. So are they ready? We get started. Are they ready? We get started. Are they ready? We get started. Are they ready? Thank you so much. So you're told PM, or you don't have a paper. Oh, it has to. Okay. PM Limited operates two divisions, namely X and Y. Division X produces an intermediate product M that has no external market. The product is then transferred to Division Y, where it is used as an input in the production of product N. The following relates the demand schedule for X. Everything is given there. We are told additional information. Product N is transferred to Y at 25. Assume that production of M and N is in batches of 1,000 units. They want us to give them the profit maximizing output level for division X at the current transfer price. Very easy diagram. So let's do a diagram. So our diagram, we have got two divisions. Our diagram, we have two divisions here. So we have here X, and then we have another one known as Y. X makes whatever they make an intermediate product, and then they are able to transfer everything that they sell to Y. At what price? Is there somebody who is able to see a transfer price? A transfer price of what here? Of 25. A transfer price 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 of 25. Now, ladies and gentlemen, this is quite a special type of a question. You can't start doing workings because you can see you have various quantities there, many quantities. So if you got this kind of a question in an exam, what would have you done? What would have you done? Now, ladies and gentlemen, the most important thing that I'm supposed to pick here as I do this question, is there somebody who is able to see the variable cost in X? Variable cost of X is what here? 13. How about the variable cost of Y from additional information? 7, eh? Variable cost of Y is 7 like that. Have they given me corresponding fixed costs? Fixed cost of X is 50,000. Fixed cost of Y is what here, somebody? 50,000 as well. 70,000. 70,000. Thank you so much. So then come here and give me the answer to number 1. Give me the answer to number 1, where they want us to give them profit statement. Division who? Number 1, they want profit statement for division X. Profit statement for division X. This was a straightforward question. No need for us to put down any working. We shall do this profit statement directly. We shall do this profit statement directly. we shall do this profit statement directly. All right. So then remember, here we have quantity. Yeah, great. You can see there are many of them, isn't it? So we have quantities there, 1,000, 2,000, 3,000, 4,000, all the way up to 6,000, eh? 6,000. Now, ladies and gentlemen, remember for X to Y, which price are we charging? It's called a transfer price. A transfer price. It's very easy. X to Y, we are charging this transfer price of 25. So in this case here, we can't say just any price, but a transfer price. Regardless of the number of units you're going to sell, the transfer price of 25 per unit is going to be constant. Because we are evaluating department X, we are evaluating department X. So from there, then I will be able to get the revenue for X. How do we get this revenue for X, my good friends? To get revenue, we shall multiply, isn't it? We shall multiply, yes. You don't need those lines, but I need them. I need them. So for revenue, we are taking quantity times price. So the first one will be 25,000. The second one will be 50,000, 75,000, 100, yeah, 125,000, 150, yeah, 150,000. That is revenue. I want to get profit. So to get profit, I need to deduct costs. I start with variable costs. Variable cost. Do you remember that the variable cost, each unit is supposed to go for how much? For X. Remember, we are evaluating department X alone, isn't it? So at 13. At 13 per unit, isn't it? So 1,000 times 13 gives me, if we produce 2,000 times 13, 3,000 times 13, 39, 52,000, 65,000, right? Because I'm adding 13, 13, 13, 13. Very easy. After that, we have 70 what here? 28,000. These will be deductions. I have to put them in brackets. Then there are fixed costs. So fixed costs. What do you know about these fixed costs? Constant all through, regardless of the number of units you make. 50,000. Constant, yes, for X. So then now I'm able to get my profit. So to get the profit, I will take this revenue minus the variable cost minus fixed costs. So like for 1,000 units, how much profit shall we get? 25,000 minus 13 minus 50,000, which gives us how much? A loss of 38,000. So you put this in brackets like that. If we produce and sell 2,000 units to Y, the revenue will be 50 minus 26 minus 50,000. A loss of 26,000. Now we can move with speed. 14,000 loss. Thank you. 2,000 there. 2,000 loss. Profit of 10,000. 10,000. What was the question asking us about? Profit maximizing output. So when you look at your profit, say which profit is maximum? Yeah, 22,000 is the maximum profit. Then the corresponding quantity, which will be a profit maximizer, will be what here? 6,000. 6,000. So then in this case here, we are saying there that the maximum division of profit, the maximum division of profit, yeah, is Kenya shillings 22,000. And therefore, optimal output will be 6,000 units. Will be 6,000 units. That is number one. Number one, they wanted us to simply evaluate the profitability of water division. The interpretation there was very, very simple. In this sitting, what most of my students were not able to get, all of them, was in number two. Number two, where they want us to give them optimal output for water somebody, for the whole company. Most students went ahead and they gave us the profit for what? They want us to give them profit for the whole company. Whenever you hear about whole company, there is what becomes irrelevant. Transfer costs, transfer revenue. Anything transfer becomes useless. You only work with the external parameters, external revenue, external costs. So I want to give you exactly 2 minutes to see whether there are students who will be able to give us number two, Roman 2. They want us to give them the optimal output for the whole company. Optimal output for the whole company. Optimal output for the whole company. So yeah, I would want to remain quite a little bit. Which question? Remember, every time you want to know the question you're doing, you look at the top here. At the top here. I hope you're able to see this. AMA September 2021, question number 5A, Roman 2 now. That's how you get to read the question that you are doing. Thank you. Now we are doing the optimal output for the whole company. For the whole company. You guys who are with me here physically, you need to take advantage of that strength and talk to your neighbor. The guys who are following from home, I believe your neighbors as well, they are very good. Neighbors at home, they must be very good on these issues to do with what here? Transfer price. They must be very good. That one I know. That one I know. Very good. We shall overcome. You're also following the online one. Huh? Or here. Oh. We scroll past page. How do we finish that thing of scrolling? So now what are we doing, ladies and gentlemen? Now we are looking at Roman 2, where they want us to, give them the optimal output for the whole company. So here you have to be very, very careful. You see, whole company must combine a few things, isn't it? Draw the diagram. We're going to draw the diagram. So we have here steel division, X, and division who somebody here, Y. So for the whole company, what I'm supposed to know, ladies and gentlemen, I'm not interested in internal quantities, internal revenues, internal costs. Nothing. I'm only interested in what will be sold by this department Y. This is what is now going out there. So the quantities, we shall use quantities of Y. So in this case here, whole company quantity equals quantity of Y. Because Y is the one that is selling to external customers. Y is the one that is selling to external customers. All right. Now, have they given me the variable costs? For X is what here? You see, variable cost, you cannot ignore the ones of X. Yeah, variable cost, you see, we are looking at labor, we are looking at materials. Those ones have been paid to outsiders. What we are again is for the whole company is anything transferred. So variable cost of X is what here, somebody? 13 Uongo. This examiner is very, very crazy at times. He comes and changes the rules of the game at the mid of the game. So like now here, from nowhere, he came and told us something interesting there that the variable cost of X is no longer 13. So the variable cost of X is what here, somebody? 5. Would have you been able to pick that? Read Roman 2. Roman 2. The optimal output level for the overall company, given that the variable cost of region X is what here, somebody? 5. So this one here has been given as 5. Why they have not made any suggestion to changing it? So we use in this case here the old variable cost of Y, which was what here? Was it 7? So in this case here, then the whole company variable cost. Whole company variable cost you add, isn't it? Which gives us what here, somebody? 12. Thank you so much. Do we have anything to do with fixed cost? So fixed cost, they haven't alluded anything to fixed cost changing in Roman 2. So fixed cost shall work with the old fixed cost, which were how much here for X? 50,000 versus what here? 70,000. Giving us how much here in total? 120,000. Thanks, Pauline. 120,000. Now, once I have really these, I'm now at home. Now I can come and do a profit statement. Profit statement for who? The whole company. And the quantities, we have agreed quantity that is to be sold by the whole company is what is being sold through its selling agent, which is Y. So the quantities in this case here will be the ones given in the question, which are what here, somebody? 1,000, 2,000, 3,000, 4,000, 5,000, 6,000. Is there anybody who is able to see the external selling price? So the price in this case here that we shall use there is the price of Y, which most students cannot be able to see. The selling price of Y at 1,000, the selling price is 1. Is it 150? 140, 130, 120, 110. Then we have what here, somebody? 100. Then go ahead and give us revenue. You know, somebody will make this argument. Let me tell you the argument I've always seen students making. Funny arguments. Somebody will come and tell you that for this, for example, 1,000 units, for 1,000 units, that we have in this case here a price of X, and then we have a price of what here, Y. So they tell you that the price of X is 25, and then the price of Y at 1,000 units is 150, and then they'll come and write here whole company. They'll tell you that the price for the whole company is 1 what here. Will this be correct, really, ladies and gentlemen? Will this be correct? No, because this 25, fine, is illegitimate. 25 is an internal transfer price. It's not money coming from outside there. So this 25 in this case here, ladies and gentlemen, is not legit at all. So for the price, selling price, we shall always use the selling price of the selling agent. Remember, we have got 2 divisions, X is only making an intermediate good, transferring this to Y. Y is the one that is in touch with the external customers. So the price that we should use here effectively for the whole company is the price of Y. So in revenues, they should be able to give me revenue. So do we have here somebody? 150,000, 280,000, 390,000, 480,000, 550,000, 600,000. So please give me now the variable cost of the whole company. So variable cost, do you know the variable cost for the whole company per unit? It is 12 times 1,000, isn't it? Because you see 12 is per unit. Yeah. So then this will give me 12,000, 24,000, 36,000, 48, 60,000, 72,000. Then we have fixed cost for the whole company. Fixed cost for the whole company. Are you able to see it somewhere? 70. Very good. I like those suggestions here. Somebody is telling me when you 70 because now it's like, why is the major thing here? No, you know, it's the whole company. Fixed costs are like rent. Even X paid rent to a landlord outside, an outsider there. The only thing we are against is what, somebody, anything internal. Yeah, the fixed cost you guys gave me a figure of 20,000. And now fixed cost is going to remain what you call? Is going to remain constant. Fixed cost will remain constant. So please remember, the expenses shall be put in brackets. The expenses shall be put in brackets. Yeah, then come here and they give us our profit. Profit. So profit, like now here, it will be revenue minus the variable cost minus the fixed cost. Give me an answer. The first one, I'm being given a figure of 18,000. 18,000. Thank you so much, Dina. 136,000. So 136,000 here. 234,000. 312,000. 370,000. 408,000. Is that okay? So then what is the question about? Maximum profit, optimal production level, isn't it? The maximum profit is what here, somebody? 408,000, isn't it? The maximum profit is 408,000. And therefore, coincidentally, the very best, optimal means best, the very best quantity is what here, somebody? 6,000. Have you written that? Maximum company profit is 408,000. 408,000 maximum. Or we take this down. So maximum profit is 408,000. And then optimal company output is 6,000 units. 6,000 units, like that. All right. Is there a possibility of somebody who has written this question very nicely to take a screenshot of whatever they have written, and then they send their notes, in this case yet, to the group, to avoid telling Mwalimu to scroll down, because I don't know, I scroll down up to where now? International data? That's fine. When you go to the last area of transfer pricing, for multinational, companies. Companies that have got an overseas branch. Those companies which are normally the very best to work for. When you work for a multinational company, chances of you getting $500,000 as a salary on a monthly basis are very high, isn't it? As opposed to working for a company which is purely local. So this one, I would want us to straight away do a question. There is this question that they brought of Maziwa. I hope I'll be able to get it pretty fast. This question disturbed our students quite a lot. It was very easy. It was a very, April 2025, question number 2B. April 2025. Question number 2B. We are starting a new topic today. Topic number 5. And we only have 8 topics. And out of the 8, the 8th one is a theory topic. This topic number 4. How many remaining? There are 8 in total. 8 in number. Mm-hmm. We are remaining with 3 effectively, yes. Yes, sir. This topic number 4 or 5. Transfer pricing is within pricing decisions. All right. So topic 4 is. Please tick in your course outline. It's very, very important. So have we gotten all of us this question? Oh, yeah. April 2025, question number 2B. Yes. Thank you so much. Please be very keen with questions, apart from the ones of scrolling. Yeah, those ones I don't want them. I'm sorry, Maziwa 𝗖𝗙𝗙𝗘 Limited is a company that buys and processes milk and the milk products. This question was not very friendly to the students. Maziwa 𝗖𝗙𝗙 Limited also sells this milk and the milk products internationally. The company has 2 divisions. We have a local branch division, which is located in KE, where it buys milk from local farmers and processes it where it buys from local farmers and processes it. The processed milk is exported to overseas branch division and external customers. Overseas branch division is located in country T. Overseas branch division is where the milk is further processed into powdered milk and rebranded. The powdered milk is then sold to external customers. The functional currency of country K, which is Kenya, of course, is Kenya shillings, while that of country T, which is Tanzania, is Tanzania shillings. The 2 countries use different taxation rates, but double taxation relief applies to both countries to eliminate double taxation effect. That one, once a student hears that, chances are they get confused. It's like a tongue twister. If can tie, a tie. Where can, very good. We shall be having that kind of an exercise here today. Tongue twisters, yes. The budgeted information for the month of April 2025 is as follows. So we have local branch, overseas branch. So we have market selling price of powder milk, 4,000 Tanzania shillings. External selling price of processed milk per liter, like that. We are told additional information. The currency of country T will be translated into the functional currency of country K for external reporting purposes. The prevailing exchange rate applicable between the 2 countries is Kenya shillings 1 to T shillings 20. The production of 1 liter of powdered milk requires an input of 1.25 liters of processed milk. Transfer pricing policy of Maziwa 𝗖𝗙𝗙 Limited is that local branch division must satisfy demand from overseas branch division for processed milk before selling any to external customers. 5, local branch division transfers the transfer price for the processed milk is at marginal cost plus 10% markup per liter. The corporation rate of taxation on company net profits is 30% in country K and 28% in country T. In columnar format, prepare a profit statement that shows the budgeted post-tax net profit in Kenya shillings if marginal cost plus markup transfer pricing policy is adopted. Your profit statement should show sales and the cost split into external sales and the internal transfer where applicable. So where should we start this question from? Draw the diagram. Yeah, draw the diagram, isn't it? Try to understand the question, isn't it? Draw the diagram, yeah. Draw the diagram. I was taught by a very, very good teacher in high school who told me sometimes back that anybody can get an A. Doesn't matter where you are coming from. So long as in this case you are procedural, everything you are doing, just get the procedure, you'll get an A. You'll become an A student. And you should never panic. Never panic. It's not about even being right. It's about the procedure and the confidence. Like me, I got 6 awards when I was doing CASLEP. And the paper P2s, SBR, ACC, I was number 19 globally. 19 globally. And I'm not a genius. I know the procedure. I go procedure, everything. And I will never panic. That thing of sweating is not part of me. Working hard. Procedure again. Because you see, there are students who will like read the question forever. Yeah, I've always seen them when I'm doing invitation. I even want to, take them out and kind of cancel them, right? Why do you read a question for a skill or something, isn't it? Even if you do what the brother told us, draw a, say in this case here, local branch, and then overseas branch. You are making a step, isn't it? Very good. Thank you very much. So let's draw together this. Yeah. And remember, the bigger the boxes, the better for you because you can put some information, lots of information inside there. The bigger, the better. So we have in this case here local, and then we have what here, somebody overseas. So local is in which country? K, which is Kenya, isn't it? And then overseas is E. Yeah. So local makes some special product. They have called it processed milk. So this one here makes processed milk, transfers some to the overseas, and then the overseas is able to change the process to who? Ui. Powdered, isn't it? Powdered milk. Thank you. So let's see, if I'm the one doing this question, I will start with the capacity output. The capacity stroke output of the local branch. Is there somebody who is able to tell me there from the question? When I look at the table given there, before additional information, there is a place they have told us production capacity is 400,000 liters. I think I would have done it better if I projected this question. I'm sorry. Just give me a minute and project this question. Because you see, when you understand these questions, these examiners will always keep on repeating them. Very good. And then the only heavy topic left is inventory management. And inventory management, you guys did inventory at the intermediate level. Do you know the formula of EOQ? EOQ was what? You haven't answered my question. You haven't answered my question, you. Economic order, but you know the formula of economic order. There must be a square somewhere. You see. 360? No. We shall overcome, yeah. That is it. We shall overcome, yeah. That is it. At least somebody is able to remember, yeah. You can see dinner. People are remembering there. You can see people are remembering there. So like now that topic, you can go to your learning management system, start watching the videos, mapema. It is the only intense topic that we have remaining. The other topics remaining are very, very cheap, like ratios. Ratios, you even know some ratios formula. Is there somebody who has ever heard of Roche? Or Rose? Not Rose. Rose is your sister's name. Return on capital. Do you know return on capital employed? What is the formula? Okay, then you know the formula of ROI. I will remind you. That one, don't bother about it. The one that I would want you to think about is inventory management. If you can go to the LMS last semester videos, watch them. Start watching them. The earlier, the better. The earlier, the better. This one, I will need to project this question because it's quite a tough one. Not very tough. Not very tough. Ule mwanafunzi mwenye hizi akapenda hii, yule mwenye anasikia kulalala namna hii, huyo sasa hizi akapenda hiyo hii question nafanya. Yeah, the toughest paper this semester will be AFM. Yes, I told you. I told you from the word. That's why I'm giving it a lot of time. A lot of time. Advanced FM, yeah. How do I know? Very good. You will tell me after your exams, right? You will tell me after the exams. We shall overcome, isn't it? Yeah. Now I have the question here. Now I have the question here. Felista is asking FM. Don't worry. Let's talk about this question, ladies and gentlemen. Let's be happy with this question now. So I've read it already. So you can see production capacity for the local branch is what here, somebody? 400,000, isn't it? That is the production capacity. So when I'm drawing my diagram here, which I'll be able to go back to my old diagram, I know that the capacity for this local is 400,000. It is going to transfer some of these 400,000 internally. How many units is it transferring internally? We are told here, demand from overseas what here? Division. Yeah, demand from overseas branch division. The overseas branch wants how many? So what do you do, first of all, if you are the manager of this local branch? You transfer to external, or first of all, you do internal, isn't it? Yeah, that is the wise thing to do. So transfer, how many here? 250,000. And then you sell externally, how many? Externally, you sell 150 to give us the 400,000. Externally, 150,000. So that 150 plus 250 gives us 400,000. Great. This is really good. This is really good. This is really good. Now, ladies and gentlemen, after that, what else have they told us here? What else have they told us here? You can see external demand for this processed milk was really very high. The external demand was 320, but you see, we cannot really prioritize the external demand. No, we must prioritize internal first here. So we cannot, we'll be disappointing some customers here because internally we are selling to 50,000. Then externally we sell what here, somebody want? 50,000. Very good. Very good. Very good. How about this? Sales of rebranded powdered milk. We're going to sell how many? So in this case here, this overseas, which is doing what here? Selling powdered milk, will be able to sell how many? What do you think has happened to the 50,000? There's a conversion, isn't it? Yeah, yeah. Because honestly, when you are changing this milk from processed to a powder, we expect some evaporation, isn't it? And that is why, although you never needed this, actually this was just noise. We are told here the production of 1 liter of powdered milk here requires an input of 1.25 liters of processed milk. That 1.25 processed equals 1 what here, somebody? Powder. Equals 1 powder. And remember, the local department, local division is going to transfer how many processed? Processed. How about 250 processed like that? You can easily get the powder. Although you never needed this really. You never needed this really. This was there just to confuse you. You never needed this degree. Because when you do this, it will be 250,000 times what year somebody in a cross multiply. Divided by what year somebody. What answer shall we get at the end of the day? You get 200,000. So they were simply putting it here to ensure that they confuse you in their process of wrestling you down, because some of these people would want to see you failing, isn't it? It's a bad game. It's like a game, a bad game. But it's a business, eh? So this is irrelevant like that. Now, ladies and gentlemen, what else will I be interested in? Now, please listen. If I'm the one doing this, I will stop even doing any calculations further. Any further calculations will stop, because here we have an overseas branch. When you have an overseas branch, you must do translations of foreign currency to the local currency. So give me a title there. Translation. Is there a business model really? No. What I know, as much as you guys would want to say there is a business that QASNEB is doing, also QASNEB students have never gotten the right strategy. You guys dilly-dally a lot. You wait quite a lot. I'm so sure there must be a ninja today who still is yet to start studying, isn't it? There must be a ninja. And is here comfortably with us, isn't it? And if you start like studying like today, yeah, you'll still pass, because you will be studying small. Yeah. So in this case here, translate overseas figures to Kenya shillings. So is there somebody who is able to see figures there which are written in the form of Tanzania shilling? We capture them in form of a table. Now, by the way, they have given us an exchange rate here. Exchange rate is 20. Tanzania shillings equals what here? 1 Kenya shilling, eh? Or 1 Kenya shilling equals shillings 20. They have given us an exchange rate. So I'm waiting for you to identify those things that are given in overseas currency. Selling price. So my brother is telling me that selling price is given in form of what here? Tanzania shillings. How much do we have here? 4,000, eh? 4,000. Exchange rate. It is 20 Tanzania shillings per what here. So then go ahead and do your translation to Kenya shillings. When you're translating, remember, you can either multiply or you divide. You can either multiply or you divide. What should we do here? What makes you think it is the division which is appropriate? Same currency, you're very, very bright. Same currency, same currency. You see, these are 4,000 Tanzania shillings. And these are basically 20 Tanzania. If you try multiplying the two, you will end up getting Tanzania shilling square. Whenever they're the same, you divide. Or you do it using mother tongue. You can also come and say, 1 Kenya shilling equals what here, somebody? 20 Tanzania. How about what here, somebody? Oh yeah. How about 4,000 Tanzania shillings? How about 4,000 Tanzania shillings? When you cross multiply, are you seeing at the end of the day we shall be dividing? So then this will be 4,000. So you divide here. So 4,000 divided by 20 gives us how much here, somebody? 200 Kenya shillings. So whenever you see the currencies being the same, you can never multiply. Yeah. Is there any other item that has been captured in Tanzania shillings? Inaitwa namna gani? Cost of rebranding. So we have rebranding cost per liter. How much in Tanzania shillings? 2,100. And of course, the exchange rate is the same. 20 Tanzania shillings per Kenya shilling. So I'm dividing. So when I divide, my online students are giving me a figure of 105. The beautiful thing with the AMA examiner, they are very lenient in marking. Here you are getting marks even without knowing what you are doing. That is a good thing of being procedural. Yeah. Because there must be another ninja kazi yake mpaka saizi ni kusoma question na kuuma kucha. Sisi hatuendi kuuma kucha kwa exam center. Kucha zinaenda kukatwa mahali appropriate, isn't it? So fixed cost, are you able to see fixed cost in Tanzania shillings? How much? 24 million. Exchange rate still remains at 20 Tanzania shillings per what here, somebody per Kenya shilling, which then will end up giving us what figure, somebody here? 1.2 million. 1.2 million, like that. 1.2 million. So shall we be able to take our normal Maghrib prayers? Hope we have online some friends of ours from the Muslim community. Are they there? They must be there. Today, physically, I'm not seeing them. Yes, so shall take exactly 10 minutes. These other guys today, I will show you something that we need to do today. Something that we need to do today. We must also do some exercise, right? We must also do some exercise. No, not there. Not there. We should be able to do some exercise. Very important. Exercises. Yes. So 10 minutes. Today we are going to practice what we call tongue twisters, isn't it? Tongue twisters. Yeah. For the 10 minutes. So you speak loudly as fast as you can, isn't it? If you get it right, we give you how much? Nothing for today, but nothing for today. Are you willing to take the first one? Who is willing to take the first one? Without fearing, even if you get it wrong, so what? So what? Yes, brother. Take it out. Kick the ball. It has to be very fast. Peter Piper picked a peck of pickled peppers. A peck of pickled peppers Peter Piper picked. If Peter Piper picked a peck of pickled peppers, where is the peck of pickled peppers, Peter? Peter Piper. You want to do the second one, eh? Okay, number 2. But you've done very well, right? You've done very, very well. You've done very, very well. Number 3. How much would a woodchuck chuck? Okay. Okay. The fourth one, eh? You'll be able to do it, eh? By the very good. Very good. I scream. You scream. We all scream. For what year? Ice cream. Is that very easy? Oh. But you have to move very fast, isn't it? Yeah. You have to try this one. Number 5. Number 5. No, number 5. Number 5. So if you want to be a very good English speaker, you need to practice using this a lot. Yeah. If you want to be a very good English public speaker, you must practice this a lot. Every day, I've mentioned like how many? 20 of them. Every day. This thing of having accountants, going outside there, they are on TikTok, they're saying that I'm not the sisters blind or whatever, but the blind glue. No, that is not our portion. No. Those ones are not most of them. We hear them when they are reading financial statements, isn't it? Yeah. Those are things that you can easily run away from. There are things you can run away from using this. Yeah. That is where we are going wrong. With this AI, everybody will be at the front door. Nobody will be at the back. Nobody will be at the back. Back office, They're being flattened. Now you will be there, outside there. So we need to work with it. So like now, number 7, I saw Susie sitting in a yeah, Susie or Susie, yeah. Okay. So I saw Susie sitting in number 8 as we wait here. I wish I could get away of unmuting my online students for them to read loudly, but we shall do that. Susie, what? It's not easy. Look at number 9. 𝗖𝗙𝗙𝗙𝗘 was a bear. That's very good, isn't it? But you can imagine, like, number 11, you're trying to tell somebody that you've got a date at 7:45, and then you're not able to pronounce very well. Unachoma. I've got a date at 7:45. I'll see you at the gate, so don't be late. Whatever RL, everything. How about number 12? But you see, you're supposed to read very fast. Very fast. No, that's very slow. It has to be. You know New York, you need New York, you know you need New York. I saw a kitten eating chicken in. The kitten, yes. If a dog chews shoes, whose shoes does? I think it is not very tough. It is not very tough. I thought of thinking of thanking you. But you see, 16 is very tough. 16 is very tough, 16. Watch, eh? Is not watch. 17 is not easy. Near and ear, and near ear, and near ear. Yeah. Very good. So I think 10 minutes are over, right? How about 21? He threw 3 free rolls. 9, nice, nothing, nicely. Oh, number 24 is yours. So this is the sushi chef. 4 fine fresh fish for you. Wayne went to Wales to watch walruses. 6 sticky skeletons. 6, they want 3 times. Okay. Which is which? Which is which? Which is which? Number 29. Snap, crackle, pop. Snap, crackle, pop. Snap, crackle, pop. Look at number 30. Not most of us can be able to pronounce this very well 3 times. Oh, that's easy, yeah? 81 is the mother of them all. So our Muslim brothers and sisters, are they back? We continue now. They should be back, isn't it? They should be back. They should be back. So, and then at the end of the session today, I will be doing some mock interview to see whether you guys are reading whatever I send you in the group. That sort of answering the question of tell us something about yourself. You see, when you go to an interview, they always ask you that question, isn't it? That is when most of us think that they've been told to give stories about their grandfather. It becomes an international disaster. Will it be good for me to do the mock interview today here? I select like 3 people. Not me. All right, so we another day, But you see, the moment you get used to it, like you do it twice, then you have like a chorus which you'll be using throughout. Yeah, and it's important get to do that. Yeah. I share this in the group. Okay, sawa. Wewe nimeweka kana mnyambo wa kiwenye hapa. Sasa tuendelee sasa. Tuache kwanza na hii intershare nikiendelea na hizi tu. All right. So then we come back to this one here. Where were we? We were doing translations. Have we done the translations? Very well. We go to the next working, which will be determination of the transfer price. Determination of the transfer price. You see, transfer price here was not given direct. You have to get it. They have told us it has a markup of 10%. So I want to see whether there is any student who will be able to give us the transfer price. This is a mark being given. Transfer price. So this is a mark being given. Go to the information talking about transfer price. What I know they have said is that transfer price policy is marginal cost. Marginal cost plus what here? 10% markup. 44. All right. 44, you are very, very good. Are you able to see marginal? First of all, do you remember that marginal cost is the same as variable cost? Remember, it is marginal cost of the first department, of the local department. So what is the variable cost of the local department? 40, isn't it? Plus 10% of 40. Remember, markup works together with cost. Yeah. That is why this unlicensed room guy gave us a figure of 40 what here? A figure of 44, isn't it? Or basically 40 times 1, 10%, times 1, 10%. So transfer price, we have a figure of 44. We are almost there. We are almost there. So then let's do our workings. The workings in this case here, our normal workings. Our normal workings. I mean, these are abnormal. We have just introduced them because there's an overseas. So our normal workings, we start with local branch. So for the local branch, what I'm interested in, external sales. Tell me what to take there. External, I take what times what? Remember the diagram, right? So external, I should take 150,000 for the local, isn't it? Have they given us the local branch external selling price? Aki niko peke yangu nita overcome lakini 70, note number what? Note number is 70, yeah? I hope everybody is able to see that 70, which gives me how much here, somebody? Huh? 105, eh? 105, 91, 51. Hili pesa mingi sana. Are you using your calculators, really? Are you using your calculators? 1050, eh? Yeah. And now remember that everything is in Kenya shilling. Yeah. Everything is in Kenya shillings. Thank you very much. What else in our normal workings? Huh? 500,000. Oh, 10.5. Okay. Niongeze 0 moja hivyo. Thank you so much for the correction. Thank you so much. What else do we need? No. Kuna internal bwana, mnasahau procedure. Cost, unaweza cost kwa revenue. Internal profit. Wewe. Internal revenue or internal sales. We shall overcome. No worries. So how many units are we transferring internally? 250,000. Do we know the internal selling price? It is the transfer price, isn't it? The 44. The 44. It is the 11 million. Wow, a good number. Thank you so much. Thank you so much. And licensed room, you must be a very, very good student. Now, ladies and gentlemen, from there, remember I want you to do all the workings for the local branch. So now I'm through with the revenues. So straight away I go to the costs. So cost, are you able to see the variable cost? So variable cost, I will take what times what? 400. 40, it's 40, yeah? Times 2, times 400,000, eh? Yeah, because when it comes to variable costing, it doesn't matter whether we are transferring these goods internally. I don't know, all of them times 400,000. Which gives us what figure, somebody here? 16 million. Thank you. Do we have any other cost? We're going to fix cost. Fixed cost of what here? 1.5 million of total. For the local alone, isn't it? Are we? It's monthly, yeah? And this figure is supposed to, this period is supposed to be what? Hmm? We are doing for 1 month, April, isn't it? For month of April. And I normally, thank you very much for bringing that up. I normally see so many students, whenever they see monthly, they simply multiply by 12. Because accountants are used to an annual income statement, yeah. It's for 1 month, like that. How about rebranding costs? Are they going to be done by the local branch? It is the other one. Thank you very much. It is the other one. You guys are awake. Thank you very much. Now, from there, you go to the other branch and they call it what here? Overseas. Unaita majina makubwa. Overseas branch. But now remember, everything is in Kenya shilling. Everything is in Kenya shillings, isn't it? So what do we start with? External sales. I think this name sales is confusing you. Can we stick with our revenue? It is one and the same. Price times quantity. Yeah, Mercy, I can see what you're saying. What Mercy is saying is that we are going to sell 150. No. No, Mercy umebaki nyuma kidogo. Kumbuka, can I get my diagram here? Mercy umebaki nyuma kidogo. Hiyo kitu ya 150 Mercy ndio tulifanya nayo hapa. Unaona hapa? Kwa international, no, the powdered milk liters we're going to sell. They should not have called them liters, really. Powdered milk should be in kilograms. But I mean, that's a mistake, which is normal. It's normal. Sorry for the hiccup. We can continue now. We can continue now. Thank you. So then, ladies and gentlemen, what we are doing here, we have 200,000. Remember, everything here is in Kenya shillings. You need the translation times 200. Can someone assist? What is it about? There's a question there. Huh? What we are getting? Demand for the overseas. They're asking for the local branch, eh? Okay, let me just go back. Okay, now I understand what they're asking, eh? This diagram here. Remember, we were told here somewhere here. They told us here the production capacity for the local is what here? 400,000. That's capacity. And then they told us somewhere here that our sister department from the other overseas region needs 250,000. Yeah. So 400,000, we transfer to 50,000. So meaning we will remain with 150,000, which we sell externally, which we sell externally. I hope, and you are now able to see that. Yeah. Overseas branch, could you kindly give me the internal revenue? Internal revenue? Botire. You know, understand that language? Because you see, this overseas branch is not selling internally. Yeah, it's forward ever, backward, never. Yeah. So this is not applicable. Not applicable. So we go to the costs. So costs, before variable cost, there is a very important cost that you shall never ever forget. No. Transfer. Well, that is the major material they're bringing. So transfer cost. So remember, it bought how many units here? Somebody? 2,000, isn't it? And each they were buying at 44. Actually, you already have this figure if you are keen enough. It was 11 million, isn't it? Do we have other variable costs here, really? The rebranding too? Rebranding. So then rebranding, I would want to hear from you. How much will be the rebranding cost? This one I would want to take a sabbatical kidogo, a 5 minutes, to see you great students of mine giving me the rebranding cost. It is 1 of 5 per unit. Thank you so much. Thank you so much. Is it times 200,000 or times 250,000? 250,000. 250,000. I know that argument is really, really great. But let's read the question. What does the examiner really talk about? What is being rebranded there? Is it processed milk or powdered milk? If it's processed, no. Yes. Yes. You need to push that down. See, remember, they're not doing like original branding. They're getting branded ones from Kenya, maybe removing the packets like that. They're not using the word and they're using rebranding. From milk to powder. Let's read the question. What was quite confusing there? Let's read the question. Let's agree. And at times, good to disagree. I can even put down my figure. You also put down yours. It's good to disagree. What is the question? Let me come back with this one here. Let's see. Let's disagree. Let's disagree here. What's the kidogo? Yes. Note number. Which note is that? I want to read with you. Note number. Oh, first paragraph, First paragraph. Very good. Very good. First paragraph. Very good. Now, so we have here cost of what here, somebody? Processed to who? Milk. So we have here. Local. And then we have what here, somebody? Overseas. Overseas. So local is the one that is making what here, somebody? Process. And then sells this process here to who? To overseas. So overseas receive this process. The qn5a somebody. And then they convert, to what here, somebody? To 200,000. So the question will be, do we work with ngoja kidogo hapa. So rebranding, should we say it is 1 of 5 times 250,000, or should we say it is 105 times 2? Let me hear from the online. Let me hear from the online students. Yes. Uh-huh. 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 Mm. Mm. For selling. Mm-hmm. Mm. So what I wanted you to see there, of course, in this case here, there is what here, some English issue there. You see, the examiner here should have mentioned what here, cost of rebranding what here, somebody. Powdered milk, powdered milk. It's an English issue, so we can agree. Let's all of us work with what here, somebody, 200,000. 200,000. Just to have it making logic. So 105 times what here? And really that's advanced MA for you. How you interpret really matters. So 105 times 200,000. Yes. To go back. How that it would have used foreign milk. But you see now the question here is, these guys, when it comes to branding, putting a brand on the packaging, it has to be on a final product. It cannot be on the other. Yes. Logically, using 200,000 is correct. But if we were to go strictly on the language they have used, it would have been that 250,000. Uh-huh. Uh-huh. What are they? You know, they are not talking. Uh-huh. Uh-huh. But you see already, but you know the processing very good. But you see now the language they've used for the local. Local is where they spoke about processing, removal of the cream, etc. And then the other process is changing it to powder. There is some misunderstanding there, but let's work with 105 times 200,000, which gives us what here, somebody? 21 million. Then we have our fixed cost, at least that one. We have our fixed cost over how much? 1.2 million. After changing, isn't it? Because everything has been changed. I think now we are good to go. Now we are good to go. Now from there, we should be able to do what here? The whole company. Is that what the question is asking? Which kind of profit statement do we want? For which divisions? If you go quiet, So in a columnar, you see this, in a columnar format, prepare profit statement as shown, budgeted post-tax net profit in Kenya shillings, if marginal, blah, 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 is adopted. Your profit statement should show sales and cost split into external sales and internal what here? So automatically then there should be a column for local branch, a column for overseas, and a column for what here? Whole company. Because if you do profit for the whole company, then internal things will not appear. Yes. So then what do we have here? Very, very good. So you come and write, even if you are not understood, you write in capital letters, profit and loss statement for what you're somebody, not overseas or local. Overseas, and then we have whole company now. And when the question itself is not very, very clear, you shall always do profit statements for the individual branches and what you're somebody, whole company. Or so then we start with no, first of all, finish drawing. Yeah, it's important. Not a must, but it is important for you to be neat. I told you, even when I'm marking, I want to know this script is for my student. Even if I don't do you any favor, but I just want to know this is my student. Okay. So now we should be able to move forward, isn't it? Now, ladies and gentlemen, we have our external revenue. You simply pick the figures, isn't it? External revenue. Local, how much? 1050, eh? 10,500,000. Overseas, 40 million. So, of course, these ones will be added, right? To get the whole company. To get the whole company. Huh? Have you used your calculator to get 3 million? No. It's quite huge. Use your calculator always. So from there, we go to internal what year? Internal revenue, which will only be earned by the local, isn't it? So local, how much? 11 million. Overseas, not earning anything. Giving us 11 million for the whole company, isn't it? Not applicable. Very good. So from there, we go to the cost. The first cost should always be which one? Transfer cost. So transfer cost overseas, how much? 11 million. Not applicable here. After that, do we have any other cost? Variable, isn't it? And remember, variable was only incurred by what year? The local, isn't it? I hope the online guys are able to follow. Yes. Yeah, you can put here, but it's good you separate them. Just separate here. All right. They're following. Thank you so much. So local, how much in terms of variable cost? 16 million. And then, of course, nothing there. Variable costs are always relevant for the whole company because there are external costs. Like material costs you're buying from outside, labor you are paying workers outside there. Then we have rebranding, not affecting the local. So rebranding is how much here, somebody? 21 million, eh? 21 million. Is it going to affect the whole company? Yes. Then we have fixed costs. So fixed cost, what do we have there? 1.5 million. 1.2 million. Giving me 2.7 million. So please put all your costs in brackets, always. All your costs should be in brackets. Local is 4 million. How about overseas? The 1.2, another 1.2 meter happy. You got 1.2 up. Huh? Overseas, which one? Or fixed cost? It's in the question. We did translate. I know where you are not able to see. Fixed cost was 24 million Tanzanian shillings. We exchanged this by the exchange rate of 20. We got 1.2 million. Are we not multiplying fixed costs by 12 months? Remember, Joyce, we are doing this statement for the month of April. For the month of April. For the month of 1 month only. It's not an annual. This is 10 million. This is 6.8. And then this one here is what here, somebody? Yeah, the review again appear tablet. somebody is asking there, why are we not bringing in the internal transfers to the whole company? Yeah, simply because I gave you a very good example, just like how you can transfer money from your pocket on the left side to your pocket on the right side. You can't say that now you as an individual, you have increased your revenue. No. Transferring money from one department to another department does not increase the revenue of the whole company. Yeah. You have? Yes. The whole company's profit will remain the same. The same. And most of the figures, this brother is asking a very good question. What if in the next question you're told that the transfer price changes to 10? You will be surprised that the only thing that will be changing is this and what year? This one. All the others are what year the same? The same. And that is why, because of time, I normally tell my students that in Raman 2, when they're changing its transfer price, copy this table the way it is. And then here, come and even write 0 here. And here write 0. You get all the other marks correct? Correct. A statement on tax, eh? There is taxation. Yeah. We forgot taxation. No worries. Nothing wrong. Nothing has gone wrong. Nothing has gone wrong. Nothing has gone wrong. So I will come here and delete this. So yeah. So in this case here we have tax. So tax local is what percentage? 30%. Local is 30% of the 4 million. So 30% of the 4 million will give me 1 point. 2 million. Overseas is what here, somebody? Overseas is 28% of the 6.8 million. Which gives me what figure, somebody here? 1904,000. Are you able to add the two? 1.2 million plus 1904,000. 3104,000. So then now you should be able to give me the PATs. You should be able to give me the PAT. Profit after who? Tax. The first one will be 2 points. You have a question? Yes. Yes. It will be the same. It will be the same, yes. It's percent of the profit. It's the same, yeah. All right, so 2.8 million. This one here gives me what figure? We 48. How about in this case here, PAT for the whole company? 696. Thank you so much. So should they give you a question on this area, ladies and gentlemen, you will not really miss to get 80% of the month. 80% of the month. Especially if you did the homework question. If you finish the homework question, then you are miles ahead. Miles ahead. All right, if you allow me, so I don't come back to this topic, they want us to teach you what we call Kaizen costing. Kaizen costing. So is there somebody who has ever come across this Kaizen costing thing? Yes. You see, it was talking about transfer price being marginal cost. Yeah, because you'll have transfer price, yeah, being your transfer revenue for the first department. There's a transfer cost on the other one, isn't it? So that is the price they have bought at. Still, variable cost will be there. Yes, yes, it has to be there. So then go ahead and tell me what do you know about Kaizen costing. Japanese, right? Yeah. Great. Kaizen costing. It is not mostly used by Toyota Japan, isn't it? Toyota Japan. Yeah. They normally believe in what we call continuous improvement. Then they will never say that you have excelled in whatever that you are doing. They always have a room for improvement. That's Kaizen costing. Yeah. It is a total quality management model. Total quality management model. Yeah. You see, like, for example, in Japan, Sweden, I've worked for a Swedish company. You can't even use a title at your workplace. You can't go there and then you call yourself CPA Weekly. So what? Yeah. Even a hi, you simply say a hi, Tom. Not a hi, Tom, Dr. Manafi. Those are things that are, yeah, in Africa. Because them, they believe in continuous what you improve. You can't say that now you have done your very best. What they used to do, like where I used to work, you'll come and tell them, you know what? We have won, for example, a contract with EABL, 50 million. So you as an African, you think it's something very, very big. So Mzungu will tell you, thank you so much. And then they'll ask you, after that, what next? Then now you go there. Because they believe in continuous what improvement, continuous improvement. So tell us there that Kaizen costing is a cost reduction. Is a cost reduction technique. A cost reduction technique that focuses on continuous improvement. On continuous improvement. That focuses on continuous improvement during the production stage. During the production stage. During the production stage of a product's life cycle. Of a product life cycle. Full stop there. So basically the term Kaizen is a Japanese word that means what here? Somebody continuous improvement. Yeah, continuous improvement. And that is why for those of you who are a bit older, yeah, if you used to have like a Toyota, talk about a Toyota of KAA. No, KAA, that is how many years ago? 30 years, yeah, 30 years ago. Those Toyotas in this case here, they are quite hardy because they were using what here? Metal here. Yeah. How about the Toyota of nowadays? They're using fiber. And that is why you will hit a lady's car outside here. Yeah, just slowly, just a small touch. Then the lady will come out and they say, I have to call my husband. Why? Because of the destruction. And if my husband is not around, there is no business we're discussing. So these guys are looking at how do we reduce costs like that. All right? How do we reduce cost? Now, wewe ukilialia ati imegongwa, ukipeleka panel beating, what happens? Jamaa anaguza tu kamerudi tena. Kamerudi. So here the concept of what continuous what improvement for them to be able to reduce their costs maximally, to be able to get what maximum profit. Every time they keep on doing what improving. So it's a concept of excellence, a concept of excelling up there. Ourselves in this case here, we would always think that you are the most. I mean, that you are at your best. Like even myself, I mean, I know that I'm at about 30%. Room for improvement is what 70%. So we keep on working so hard like that. Now, give us there, very important title there, Key features. In your exams, you always see them talking about key features. Key features. Key features of Kaizen costing. Number one, they don't believe in big bang. They focus on small focuses on small ongoing improvements. Ongoing improvements rather than major changes. Rather than major changes. Rather than major changes. That is number one. Number two, seeks to reduce costs. Seeks to reduce costs while maintaining product quality. While maintaining product quality. While maintaining product quality. While maintaining product quality. That student is mentioning, yeah, my vehicle there. I was in talk with Defender 110. To me, that is the best vehicle. Defender 110. Ikiwa na bulba yake na guruma kweli kweli. The best. Ya kulima na shamba. No, it's very comfortable. Defender 110 ukiwa umeiweka vizuri, it's very very good. Gari ya kitambo iko ile old engine, haina Puma engine. Mzuri sana. Alafu simple engine. Hata kiripika mahali wewe mwenyewe una connect tunaye unaenda. Kama yangu hata kupeleka kwa mechanic hakuna. Kuna. Wewe unasema labda gani? Land Cruiser 100 series the best. Okay. Wow. Is it true? Oh. I'm like, okay. It involves all employees. Involves all employees. All employees from management to shop floor workers. To shop floor workers, full stop. Involves all employees from management to shop floor workers. So basically it uses what we call total participation approach. Yeah, because we believe in Kaizen that everybody has got what to contribute, including the cleaners. These guys have worked with this company for a very long time. When you put them in what we call quality circles, they have what they can tell us to improve here. So it involves all employees from management to shop floor workers. All right. Another feature there, very important feature, is that it is applied during the manufacturing. Applied during the manufacturing. During the manufacturing phase. During the manufacturing phase. Number five, encourages elimination of waste. Encourages elimination of waste and inefficiencies. Yeah. So the last part there, quite similar, mentioned there, objectives of Kaizen costing. The other sitting, they were asking us this. Objectives of Kaizen costing. Yeah. Reduce production cost continuously. Reduce production cost continuously. Continuously. Improve productivity and efficiency. productivity, and what here? Efficiency. That is why you will get, even, for example, in these TQM models, this guy is talking about employee nap, like the lunch hour nap, isn't it? Kama ni Chinese model, lazima after kukula, unaambiwa ulale mandatory 30 minutes. Ukiamuka ni kazi, unasikia uko fresh. Does it work? Does it work? It works, yes. Not in Africans. It works. Just try it one time, you'll see. So long as you don't oversleep, Overeating, okay. The portion matters, The portion matters, Okay. Even 10 minutes is enough, Hata kama kuweka kichwa tu kwa meza, isn't it? Yeah, it works. It works. Yeah, enhance product quality. Enhance product quality. Product quality. The last one is increase profitability. Increase profitability. Profitability and the competitiveness. And the competitiveness. Competitiveness. Competitive. Umeandika vizuri. Competitiveness. You umeandika vizuri. So thank you so much. We've come to the end of our today's session. There are students who still have another class coming by. Let's give them a few minutes here for them to grab something. How is your plan tomorrow? Even if it's a theory paper, even if it's a theory paper that want me to assist you, like AAA from home. From home, you don't have to come here. Can we plan something? AAA, leadership and management, I'm also very, very good. The case questions. I'm so sure right now you don't want my services in that line. But when it will be like a month to the exam, you'll be looking for me all over. We shall overcome. Yes. Efficient, yes. In terms of this capacity, we must always produce maximally capacity, yes. In terms of these objectives, Kaizen, the whole time. Do I understand your question? When you look at the first department, when you have to be told, for example, that this department has maximum capacity of 450,000 or 400,000. So in this case, it has to endeavor to transfer the 400,000 to the sister department. What is left external? It can't work at 90%. What? Yes. No wasted in between. Yes. That's a very good question, because you'll always get questions where you are given the capacity of the first department. Always start from there. Thank you so much, ladies and gentlemen. I'm looking forward to meeting you tomorrow at 6 p.m. and I'll be live here in class. Will you guys join me here? You'll come. All right. Bye-bye. Bye. Good night. Na wewe mnapenda kwenda nyumbani mapema sana. Hapo ndio sasa Kaizen anawapeleka. Si Kaizen continuous improvement. All right. We shall overcome. Okay.